Hello everyone. Want to reach out to all of the investors that we have who are invested in the Hospitality Investors Trust. We sent out an email last week, and as you all know by now, the value of the trust was repriced from $13.87 down to $9.21, so about 33% off. As we mentioned in our email, we're obviously quite disappointed, and we finally got to speak to management. They had a conference call on Tuesday, and we were able to ask some questions. And the reason for the repricing down, especially that far, was basically threefold. So the first one was, if you remember last quarter with the market being down, the repricing came in at based on the December 31st value. So everything took a pretty big hit in the last quarter last year, and most of the other hospitality REITs that are publicly traded were off quite a bit. Two similar ones that are traded publicly to the hospitality REIT are Apple REIT and Summit REIT, and they were off 26 and 35% last year. So when the appraisers go in to put a price on the company, on the shares, they have to look at what other comparable trusts or comparable REITs are priced at. So that's probably the majority of it. That's what management had said on why it was repriced. So that's one of them. In general, the other things that are happening in the hospitality industry, that area is labor costs were up. So as you all know, minimum wage in a number of states have gone up, and they're all going up to approximately $15 a share. So expenses were up. That was a small part of it. And then also there's some additional hotels that came online. So, no sugarcoating it. Bottom line is that this has been a rough investment for us. It's the one negative account model that we have in our clients' portfolio this year. The only good news is that we never put too much in one area. We calculated, looked at our clients' accounts, and it probably accounts for about between 0.5% and 1.5% off the total portfolio return. So if it hadn't been down, your portfolio might be up another percent or so. So that's the only saving grace, if we will. And just so that you know, collectively, Lighthouse here, we had over $200,000 of either partners or affiliates money that's in this too. So we eat our own cooking, so we're feeling the pain personally as well. So going forward, what do we do? It's not public, so we can't sell it. They did last year have offered to purchase shares back at $9. We don't know if they'll offer again. If they do, that may be an option for us. Other companies have come in with offers at times, so we will check those out if they make any sense going down the road. In the past, the company had been saying that they were looking to have a liquidity event, either merge, sell, or list on an exchange, 3 to 5 years. They're now saying 2 to 4 years, and that's basically because the property improvements are about 2 years away from being done. So as we get more information or more options on if we can liquidate at any point, we'll get back with you. As always, we want to keep you informed, good or bad, on what's happening with our clients' investments. So as always, if you have any questions, don't hesitate to give us a call, and we'll be happy to go into more detail for you. Thanks.